Mingao, thank you so much for joining ANZ Blue Notes. It's a pleasure to speak with you today.
My pleasure too.
Now, as someone who lives, works and breathes China almost on a daily basis, can you please talk to us about some of the midterm things that you think will play out over there in the coming months?
Well, China is in the transition, right? So the transition really means we are transitioning from the old economy to the new economy, but it takes time. So in my view, 1/3 of the Chinese economy, which is old economy, already in recession, but about another third of the economy, which is a new economy, that's still growing double digits. The rest is like in between, right? So in that sense, the transition will continue. The old economy adjusts downwards, while the new economy could become bigger, and eventually it will offset the downside risk of the Chinese economy. But the transition itself is not an easy move, because it means more like bad loans in the old economy. It means layoffs. It also means a painful adjustment for workers, right? So this is taking some time. Capacity cut is another a problem to be resolved.
Okay, and the other thing that we've seen recently in the press is a lot about China's supposed bad debt problem. Can you provide us with some of your thoughts on this?
So the bad debt mostly arising from the old economy, right? So this old economy had a strategy in the past a few decades with a high leverage ratio, heavy assets, right? So in the near future, when the financial market adjusts, there is a chance that the actual cost of funding will rise, and heavy assets will become a bigger burden, right? So there is a risk if there is a credit crunch, more bad debt will have to take place. So it depends how the Chinese authority is able managing the economy. If they can have a smooth transition, the bad debt can be managed or can be controlled. But if there is a big shock, I think a non-performing loan could be potentially a big issue.
Okay, and what about a slowing Chinese economy? What sort of impact do you think that will have on the regional and global economies?
First, I think it's about the confidence, because China growth is about 1/3 of the global growth, right? If China slows, the global investors worry about the economy will be affected negatively. And secondly, China's imports, right? Will affect the global, at least the commodity market. So it's clear that when the old economy in China adjusts, China's demand for commodity, for resources will be reduced. And that affects commodity exporting countries. And then lastly, it's about the capital flows, right? So Chinese people will have to diversify their portfolios to the rest of the world. That is actually a positive addition to the financial market in the rest of the world. But at the same time, less investment opportunities in China could also means a bit slower financial market expansion, right? So overall, I think during the transition, the key is about the growth momentum. The key is about the longer-term trend, right? So in that sense, we are still constructive, but China is undergoing adjustment in the next few years.
Lovely. Well, thank you so much for your time today, Mingao. There's obviously a lot to think about, and we appreciate you joining us today.
Sure. Thank you.
Thank you.